Okay, we're going to go over exercise 17-13 clone, I call it, or C, for a homemade duplicate or similar exercise to 17-13 that you have for assignment 3. In this case, we'll say that it's the Perfect Page Publishing Company, which began operations on May 1st. And there are also 4 jobs in this month of May operation. They began their business, so everything would have been 0 at the beginning of the month. And there are 4 jobs just like there are in the exercise that you have for homework. So jobs 1 and 2 were completed during the month and recorded on the job cost sheets. And refer to question 5 from your discussion questions for chapter 17, which is to what a job cost sheet is. It's a summary of the materials, labor, and overhead costs pertaining to jobs that have been worked on, either in progress or completed. Jobs 3 and 4 were in process at the end of the month with their direct material and direct labor costs recorded only, no factory overhead. In any total cost for a product or a job, there are 3 cost elements to consider: materials, labor, and overhead, and in practice they call it MLO. We'll also consider that going into this problem, there was $790 of indirect materials and $1,630 of indirect labor recorded during the month of May in this case. The one you have for homework is August, I believe. So they want us to do 4 journal entries. First for materials, then B is for labor, C is to do 2 things: figure out how to apply the factory overhead and have to come up with the way the company has the overhead application rate, which is a single overhead rate that is a ratio based on direct labor cost. And then the final entry D will be to record completion of jobs 1 and 2 in this case. So let's go up to it. Here's the agenda file. So these are the numbers, and this file will be available to you. You may want to look at it as we're going over this. That are the accumulated costs for each of 4 jobs so far in May. And 1 and 2 are finished. 3 and 4 are in progress on May 31. And the business started on May 1, so this is all the cost to date, which is the same thing. So the first thing that we're required to do is to record the direct and indirect materials used in May for this company. And the way to do that, and this is for all direct and indirect materials pertaining to all 4 jobs worked on. Okay, so if you look at each of the 4 jobs and add their DM numbers, job 1, 12,000, job 2, direct materials at 5,900, job 3, 7,300, at job 4, 1,200. Make sure you can find those. Those are the first numbers for each job. Then that's the total direct material costs. Only direct material, which is used on the product, that is practical to record exactly and or is used to make the product, obviously, is charged to inventory, which ultimately will be part of cost of goods sold. And the indirect materials, $790 in this case, is charged to a factory overhead expense account that accumulates with a pool of all other overhead costs that will go into accumulating actual factory overhead expense in total, and then later developing a new overhead rate. So the way to record this thing Okay, so I'm going to clear, if you can see this, and also the file you have. The direct material will be the 4 DMs for the 4 jobs added together. In this case, 26,400, and that's all debited to WIP, which is the second inventory account that is increased with a debit as it is an asset. Then the $790 in indirect materials is debited to not to factory overhead, as the book indicates in chapter 17. That's too generic and would be impossible to reconcile if you had, in many companies, hundreds, maybe even thousands of entries. So to keep track of overhead detail, it's much more practical to break down the type of overhead costs and then put them together in a group of accounts and then add it all up later. So I want to use a code which is a scheme of overhead accounts rather than one. So we're going to debit FO expense dash, in this case indirect materials, spelled out, or IM abbreviated. So when we record overhead, we will debit some account called FO expense and then dash and then whatever the type of overhead expense is. So debit FO expense dash IM 790 and then credit the raw materials account for the sum of the two dollar amounts added together, 27,190. When inventory cost is being added to production, WIP in this case, the material is being transferred from the raw material stockroom to the production area, so the from account is credited and the to account is debited. So WIP is increased, the raw materials, the items are leaving from there, so that's credited or decreased. The next entry is a factory payroll entry pertaining to labor. So we'll clear that guy out. If you look at the 4 labor amounts for the 4 jobs, you see $3,600 for job 1, $1,800 for job 2, $1,250 for job 3, and $420 for job 4. That totals $7,070. The direct labor, which has to do with labor directly worked on jobs that will be for customers, is also charged as a second cost element to WIP because it's part of total production cost. And the indirect labor is another factory overhead element. So we will debit an FO expense dash IL, or indirect labor, for that. And we will credit a liability account for when we run payroll, which is wages payable. So debit WIP for $7,070, debit FO expense dash indirect labor $1,630, credit wages payable $8,700, which is the sum of the direct and indirect labor combined, and that is on the file that you should have available to you. So all we did was we added up the 4 jobs in direct labor costs to get the debit to WIP, and then the single dollar amount given to us of $1,630 for indirect labor was debited to FO expense, because indirect labor is a kind of factory overhead. And in chapter 16, when we went through the different cost elements, IL is one type of indirect factory overhead. So we add it to the factory overhead pool. Credit wages payable for all wages paid to factory personnel, which is direct or indirect labor only, and then the checks will be issued later, and then you would debit wages payable and credit cash, but you don't have to on this exercise. So where you get the big bucks is on entry C, which is to record the total factory overhead applied to all jobs. Well, the first part about this, the trickiest part of this entry, is to figure out where did they get the factory overhead dollar amounts for jobs 1 and 2? How did they do that? Like, oftentimes the factory overhead rate is simply a dollar amount per hour, but in this case they tell you, or we're going to have the same kind of overhead application in this clone problem as you will for exercise 1713 with Cox Publishing, which is overhead applied is based on direct labor cost. So anyway, how you figure that is take the two overhead amounts, the FO amounts on jobs 1 and 2, 5,760 plus 2,880, and then divide that by the sum of the labor dollars on the same jobs. So the labor dollars for job 1 is 3,600 plus 1,800 for job 2. You end up with 8,640 divided by 5,400, and that comes out to an even 1.6. So basically the application rate is overhead is applied at 160% of direct labor cost, or 1.6 times DL cost. That's the ratio of factory overhead to labor that you can use for all jobs. But you determined it by looking at the actual numbers for jobs 1 and 2. That's all you had to go by. So now, the next step of Part C would be to add all the labor for all 4 jobs, 1, 2, 3, and 4, 3,600 plus 1,800 plus 1,250 plus 420, and you get a total of 7,070 direct labor, just like you had in entry B, times 1.6, our application rate, will give you $11,312 total factory overhead for the 4 jobs. Now, what do you do with that? Well, that's a third cost element. In entry A, you had materials added to it. In B, labor added to it. In C, overhead gets added to WIP when you figured out the total to apply. So you have that $11,312 number. Again, debit WIP, $11,312. And I do not credit an account called factory overhead as you do in your book, because, again, in practice, that would be ridiculous to try to reconcile the endless amount of entries that get debited and credited in there. So basically, you'd have a tiering structure of FO accounts on a chart of accounts with the details of the type of expenses being debited in, and the amount applied will be credited here for the amount added to WIP. So that's an application rate which is credited from a predetermined overhead rate which offsets the actual overhead expenses that get debited in. It's hard to picture all that now, but we'll explain how that works later, how overhead flows through the general ledger, how it gets applied, and then how the actual costs are compared to that. That's another story. But anyway, you came up with the 11,312. Debit or added to WIP as a third kind of cost. Credit, FO applied, 11,312, and that's total factory overhead applied for May. Next is entry D, and that's to record the completion of jobs 1 and 2. So, as we told you going in, jobs 1 and 2 are completed. They're going to go to customers. So, what we'll do on them is you need to add the total costs, material, labor, and overhead combined for both jobs together, and get that dollar amount out of the WIP inventory account, decrease it because it's leaving there, and increase the account that it's moving to. So